What's up once again, world of YouTube, wide world of sports. It's Super Bowl Sunday. And if you're watching this in the future, then it's not anymore. But hey, happy Super Bowl Sunday to everybody. I gotta wear my sports gear here because it's a sports kind of day. It's almost like a holiday here of sorts in the United States. So for those of you that are watching on the replay, thank you for tuning in. And I'd love to hear your thoughts on PepsiCo. We're going to get into it just a little bit. You did see from the thumbnail, oh no, why am I worried? Well, it's probably not a surprise why I'm worried about PepsiCo. So they did put out their latest bout of earnings, the full year results, and lot to be excited about. They're still doing good, but a lot to be a little bit, I'd say a little bit to start getting nervous about. And let's do this because for those of you that don't know, we're watching myself here because I'm old school and looking whitewashed here. But yeah, anyway, so what's up, you guys? We're going to get into it and then we'll talk, we'll chop it up in the chat. But here we go. So first I want to show you is that PepsiCo, if I will do this right here and actually share the screen for you guys to see, because let's do this. And people are like, come on, dude, get on with it. Get on with it. By the way, I'm Russ. I'm wearing my Blackhawk stuff because I'm from Chicago. What happened there? There we go. All right, this is what I want to share first. We'll share entire screen. Do this. All right, so PepsiCo. Come on, you can do it. Oh, the beauty and the joy of being live. It's just, it's one of those things you guys got to love here. There we go. PepsiCo. So I had it pulled up, but not anymore. PepsiCo, there it is. Boost their dividend by 10%, which is their 51st straight payout. And that obviously makes them a dividend king. So when they have 50 consecutive years, a company is a dividend king. It's just a title that's bestowed upon them. When they do 25 years, they're a dividend aristocrat. And when they do 10 years, they're a dividend achiever. And I believe there's one for 20 that I should remember. But anyway, so they did raise that dividend from $1.15 to $1.26.5 per share per quarter. That's $4.60 per year, I do believe, on that. But let's get back to why we are so worried here. Well, first of all, let's show you the worry part, right? You guys want to know the nice, going for the Celtics. All right. Shamir, he's up in Canada anyway, by the way. Yeah, sorry about that, guys. Let me show you the whole screen here about why I'm worried, why you popped in, and then we'll get into the other numbers here. So if we click on PepsiCo, yeah, we see they have a dividend safety score of 93. But what I'm worried about, here you go. You can see my financials on there, my shares. Put it over a little bit right there, so I'm not blocking it. I currently have 100 shares, bringing in $506 a year. So it's getting up there. 9.1% of the total income, and percentage of the portfolio is still 12.2%. So eventually that's going to get under 10%, which I'll feel a little bit better about. And we're up 17.2%. Average cost on those 100 shares is right here, $150.37. 11% 20-year compound annual growth rate. So very solid for such a big blue chip company. And they did raise that 10%. But what I am worried about, and here we see they're going to go ex-dividend March 2nd, again, for that $1.26 per share. Their dividend is about in line, almost exactly. It's slightly below the 5-year average of 2.88%. But this is the big bugaboo right here, is the free cash flow payout ratio. Now, the free cash flow payout ratio, as many of you do know or may not know, is the dividend gets paid out of free cash flow. So with free cash flow, the bottom line number, the bottom line number, you can, let's see if I remember, you can pay your dividend, you can buy back shares, which they've also been doing. You can also carry that as cash on the balance sheet, or you can pay down debt. So that's pretty much the four things you can do with free cash flow. And as we see here, when it's over 100%, that means that it's costing you money to pay the dividend. So right now it's costing PepsiCo money to pay their dividend, which is not good. And this can't go on in perpetuity. So something's going to have to break, and they're either going to have to fund that with debt or issue more shares or just have more money trickling down to the bottom line, or did I say cut the dividend? That's always an option. Remember, they're not sacrosanct. So this 111% is a little bit worrisome. And I hope that they're paying attention, because a lot of newer investors, they look at earnings payout ratio, but earnings payout ratio can be financially manipulated. So they're buying back shares, but I would rather see them pay down some of that debt. And obviously you have to service the debt. So let's look at that debt service really quickly here. I didn't want to be too deep into PepsiCo's numbers, but sales growth has come down a little bit, and they've really tapered off buying back those shares. Now we're going to see here, I'm going to show you that they're still buying back shares. Their total sales are going up. That's because they're raising their prices, and people keep buying your Fritos, Doritos, the PepsiCo, the Mitten Dew. They got hard Mitten Dew, although they did say that they don't want to be an alcohol distributor. They're just going to have their little bits of product here that has good margin that they're going to do, like Mountain Dew. Everyone likes that. Return on invested capital, 19%. So that thankfully is still really strong. But the net debt here, 68%. Obviously, that's not terrible yet. The interest coverage, thankfully, is still high. Now, this is how many dollars of operating income you have to cover every $1 of interest expense, which is $15.71. So that is still really high and really good. But I want to show you guys something kind of cool here with the share buybacks that many of you might not be aware of. And I'm going to add this to the stream. So check this out. This is PepsiCo's, we're going to work our way forward here. This is Q1 of 2022. Now, this is in the quarterly earnings. I can show you guys where to find that if you like to do it yourself. But yeah, Kevin, you need more Pep stock. Just a minute, man. You're going to see something interesting here. So the average price paid, of course, I'm blocking it. Let me hide myself here. So I'm not blocking these numbers. Voila, there we go. All right, here we go. We're going to run through this really quickly. So this is what PepsiCo bought back. They bought back 1.3 billion shares, right? No, that's not right, is it? This is in millions. I get confused, guys. I get tripped up at this. But anyway, the average price paid was $161.08, right? We go on to Q2. We see the average price is about $168. So it's climbing up. $170. So they're buying back almost at any price. And then as we get to the end of the year, look at that number from the 27th to the 31st of December. November 27th to December 31st, they had paid an average of $182, and I think that's 300,000 shares they bought at an average of 182. I think the all-time high was 186 and change, but from my calculations, the average buyback price from 2022 was $171.59. So not terrible, not terrible. A lot of people, let me bring myself back on there. A lot of people, and Warren Buffett included, say if you buy back over intrinsic value, you're destroying shareholder value. You're pissing away money. Let's see here. Let me show you the intrinsic value of PepsiCo according to Alpha Spread, so we can get a little bit of a baseline here. AlphaSpread.com gives a base case intrinsic valuation of $153.31 a share. Again, my average is 150, so I'm just a shade under that. So ideally, in a perfect world, they wouldn't buy back any shares until you got closer to that number. But here's the interesting thing. As we head back to this StreamYard. Let me add this. Okay. There we go again. All right. Check this out now. So these are three. I went back 10 years and you're going to see how, yeah, they may have bought some shares that were overvalued, but watch this. Now in 2021, interestingly enough, PepsiCo, it looks like they issued 3 million shares. Their share count increased. Now, I don't know, that may have been through options or grants or something like that. But either way, look at this 2020. Now, this is the end. This I didn't do all 4 quarters of every year because we'd be here all day and we got stuff to do. I want to chat with you guys. So check that out. $139 in 2020. This is just at the end of the year. Going to 2019, $135. 2018, $113 they're buying back shares at. Down to 2017, $113 again. 2016, $104, $97 in 2015. In 2014, we've got $95. And look at that. In 2013, $82 a share. So when a company just, I've always said it, you guys know I say it, that the earnings will follow, or the stock price will follow the earnings eventually. Sometimes it can get ahead, but it's going to catch up either up or down. And check it out. I want to show you guys a really bad example of one thing Warren Buffett does say is that if a company buys back shares at any price, it's as foolish as just you buying a business at any price, just going to that business on the corner saying like, I'm going to buy that business. How much you want to pay? I don't care. I'm just going to pay whatever they ask right now. So it's kind of the same thing. Like you need to do some due diligence there. And a lot of companies will destroy shareholder value, as did this company right here, Meta. Now this one isn't so bad because this is Meta from 2022. Look at this. $117, $105, $126 a share Meta was buying back, right? And all the way on the far right, I can't move my mouse on the screen. Well, we got about $10 billion that they spent. Well, if we go back to 2021 and Meta, look how awful that is. They were buying back shares in the $330, $329 range, and they were spending $50 billion, $43 billion on buying back shares. That's awful, and that's destroying shareholder value. And if they ever get back above that, that's to be seen. But just look at that, the difference a year made from 2022, they're paying $105, 2021, they're paying $335 a share that they're buying back. So always something that we want to be careful about as companies are buying back shares. And yeah, so again, just something to I'd love to know what management plans to do in that regard. And we can remove this. And yeah, do you guys let me know if you want to see if a simple way where you can look at any company to see what they're paying for shares. I drink my butt. Dude, this is awful. I changed the setting on my camera here. You can probably tell. Look at, I'm orange. I'm an orange guy today. And yeah, so what are you guys buying? What are you doing? I mean, I had some other numbers here that I don't know. It might have been too deep into it. Here, I can show you guys. Actually, we'll look real. See how many of you this scares off here. But all about PepsiCo is. I'm sorry. Here we go. Here we go. Here we go. We'll just share the whole thing. Yeah. So that's something to worry about. Again, that they're paying money. Now it's costing PepsiCo money to pay that dividend out. And again, that's just not going to fly in the long run. And what was I looking at here? Oh, here we go. Make this a little bigger. PepsiCo, if you guys don't remember, it's weird that they still show that they own Tropicana, but they sold off Tropicana Naked brands right here. In the first quarter of 2022, they sold Tropicana Naked and other brands to PAI Partners for $3.5 billion in cash and a 39% non-controlling interest. But they are still here. Look at this. PepsiCo is still the distributor of their portfolio of brands. So they're still distributing those brands. But yeah, there it is. So total PepsiCo was the juice transaction, $3.2 billion that they had cash coming in. And just, I'm going to nerd out here for a second. And that was an impact of plus $2.04 per share in 2022. And this will be the last nerd out thing. I was looking, of course, it's not going to be highlighted anymore. You son of gum. Let's see, where were we? The write down. So here's the juice right here. That's the juice. It was 3.5, but oh, there we go. Now it's got me back on there. And they had write down. So a lot of companies like AT&T did this. Like it's a non-cash impairment charge, meaning that because interest rates went up, it's decreasing the value of assets they have. So they're writing that down. It takes a hit to earnings. So those two almost negated each other out. Yeah, so that's just a little interesting thing I'm looking at. And I don't know, that's probably it for the nerd out stuff. So you don't want to go too deep. And I'm going to see what you guys are saying here now. Not a lot of people in here. I mean, it's Super Bowl Sunday and all, right? Do you guys have any plans? What are you doing for Super Bowl Sunday? Dude, I am just whited out crazy. Papa's going to fix this color balance for next time. I promise you. And yeah, again, good morning, everyone. Oh my God, 16 minutes on that? Really? Hopefully that wasn't too deep. But again, for those of you just tuning in, PepsiCo's free cash flow payout ratio is now 111%. No bueno. That's going to have to change because they're not going to be able to do that in perpetuity. And let me see what you guys are saying. I'm going to get to this faster than Ryan, who's in the house. He gets so many people, though, so it's hard for him to get caught up. Let's see. Yeah, should he be worried about Pep stock? Yeah, they did announce that big dividend increase, but I could see them falling if we hit a recession, and they can't really raise their prices that much more. I was looking at their free cash flow yield, which I believe is like 2.79%. I think almost, I think in 36 years from what I was looking at and reading, there's only been 2% of the time that it's been higher. So I just think that we shouldn't be worried. They're going to be fine long-term, but I would not be surprised if at some point during the year we see it fall below $150 a share. So yeah, not worried just yet. They can drag this on for a little bit. They're such a big company, but yeah, you guys you got to understand and know that it's costing PepsiCo as things are right now. Things change. I still think that we're going to see some of their price increases get filtered through. So that's still got to hit, and that should be bringing it down a little bit. So not worried, just kind of have your spidey sense up. Like that's what I do a little bit, or a little bit. I don't know. Let's see. What are you guys saying? What do you want to know? Anything. Ask anything you want. I don't care. Have fun with it. The CFO, which is Hugh Johnston, said they have no intention of lowering prices either. Yeah, it's going to be interesting. But if people stop paying it, then they're going to have no choice to lower prices because that's what they do to stay competitive. So as things are right now, and I do like Hugh Johnston, pretty cool dude from what I can tell. But let's see. Kevin, you need more Pep stock. Yeah, and you know what? I may even add more if it goes below my average, but we'll see. Again, my guy's in the house, Brian. Salute. Let's see. What do you guys want to know? I am drinking a bubbly. Oh, Bublé, Michael Bublé. By the way, I do a thing now. It's going to be my second year, the Super Bowl commercials. For you guys, I'm going to watch all the commercials, and then I'm going to put a video together of the top 10 dividend-paying company Super Bowl commercials. Kind of a fun thing. I've already been getting ahead of the game. I may or may not have seen a few commercials, so going to be some good ones out there. But just hopefully to bring attention to some people that may not be dividend investors. They might, because all this next week, especially tomorrow and Tuesday, people are going to watch the Super Bowl commercials, like the the clip videos people put together. So, might be getting some new people into the fold saying like, hey, what is this dividend paying businesses? Let's see. Look at this. Yeah, Shamir's not going to watch the game. You got the CFL up there anyway, man. So Kevin is still buying Pep. Really, Kevin, are you worried at all about buying PepsiCo at these prices? Do you think that I feel that it's just still kind of expensive. What are we at, like 176 ish? I think, man, I don't know. I think it's still a little bit. Yeah, Kevin. So this is the thing. Like Kevin Burgess, by the way, check out his YouTube channel. Put the link in the description below if you want. Um, I want to say less. That should have been one of my New Year's resolutions. Just take a pause, collect your thoughts, let it flow. Kevin and I love looking deep into the financials, and I'm learning. I'm expanding my knowledge so I can have a better and more informed opinion. And it's just something to pay attention to, man. And I'd love to show a lot of the stuff I look at, but it is just so freaking boring. People would get put right to sleep, no doubt about it. I don't know what to say, Joe. Poor Vikings. I think they got to get rid of Kirk Cousins. I don't know. Justin Jefferson's pretty nice, though. What a piece to build around. Yeah, Coke reports on Tuesday their free cash flow payout ratio. Let's take a peek, Shamir. Let me hide your comment first so we don't clog up the screen here. Let's look at Coca-Cola. I know it's nowhere as high. We can stay zoomed in, right? Or might. Come on, you could do it. There we go. Coca-Cola. Let's shrink her down. Shrink her down. Dividend. I'm just reading now. November 30th. Let's see. Oh, they're actually below their 5-year, also 5% below the 5-year dividend yield average. There we go. Their free cash flow payout ratio, 75%. So much better. But here you go. Look at this. Perfect example. They went from 72 to 93% in 16, 17. They went to 119%, 109%, came down in 18. Then back down to normal, 81, 81, 64. Now we're up to 75. So that's why I'm not too worried, but it can only be that high for a couple of years before it really becomes a problem. So that's why I said it's just time. Just pay attention to it because, I hate to say it, but the math is the math. The numbers are the numbers, and you don't want to see your company costing them money to pay the dividend. They can't do that in perpetuity. And that is good old Coca-Cola. All right, what are we doing? What are we talking about? Let's see here. Andrew, thank you for asking questions. Coca-Cola owns 27 companies in beverage and snacks. Do you know what their names and how much is the stocks for each of them? Well, Andrew, I'll tell you what we'll do. Come on, everybody. Let's go surf the internet. Come on, everybody. Let's go surfing now. What do I want to do? I did it. You summa gum. See, I said, let's do this. We'll use this screen to start off of. Oh, for Christ's sake. There we go. Beautiful guy. I don't remember Coca-Cola's website name, but here, you can watch me Google it. We'll do KOIR. That'll bring us to their website. Usually you can put in the ticker symbol and then IR, and it'll bring you to their, let's see. So we want to go to where's brands? Segments. I know it's somewhere, right, guys? There's somewhere that shows all their brands. I probably should have done is searched for it. Oh, come on. Where is it? Where is their brands? They have. All right. Bear with me, world, as you watch me, everybody that's watching. This is riveting, I know. Riveting entertainment. Here you go. Let's see where it was hiding. Yes, we accept the cookies. It was under brands. I must have just missed that. So here you go, Andrew. They have. It's supposed to be here. There we go. Tons. What is that? Is that Budweiser? Oh, yeah. Look at this. What the hell is appetizer? That sounds disgusting. Is that like Anyway, yeah, AHA, they got Barks, Aquarius. These are going to be all their foreign brands too. Body Armor, Dasani, Costa Coffee. No way. Diet Coke is Coca-Cola. They got Fairlife, Fresca. All right, Fresca, Fanta. Did not know Fanta. We're learning, everyone. Gold Peak, Innocent. I've seen that, I think. Jack Daniels, Jack and Coke, Peace Tea. Look at this. They got a ton, dude. Minute Maid, Schweppes, Schweppies, Powerade, Simply. Great for mimosas. Simply Spiked. Really? Glacio, Sprite. All right, we're not going to, I think that's it, right? Topo Chico and Glacio Vitamin Water. So that looks like all of PepsiCo's brands. And oh my God, I'm not showing it. I'm not showing it. This is brilliant. That was brilliant. Look at how many people dropped out there. Like, this guy's just reading names. All right, let's do it again. You can pause the video. This is great. I'm glad I looked at my phone at least and caught it, because, you know, I can't hear you guys. I wish I could hear people saying, hey moron, you're not showing the screen, you know? Yeah, here, I'll just do that again real quick, because why not? You got nothing else to do. I can't believe it did that. Show entire screen like this. I don't know why it did that. So here we go. We'll just go through quick, because you heard me read them out. 200 brands worldwide, Andrew. This is what I was reading out. As you guys, I zoomed in here on Apple Teaser or Appetizer. I said, wow, that sounds disgusting, blah, blah, blah. I'm doing the replay here. There we go. Barks, Coke, Body Armor, Fairlife. Yeah, now I can see I'm on there. Good Lord. Jack Daniels and Coke. I apologize for that for everyone. This is what you get here. I'm still learning and growing. And there you go. So those are Coke's brands. What is this? Their Instagram. You can follow their brands on Instagram. So those are your brands. Yeah, I hope that wasn't too terrible, guys. But, you know, hey, all right. Look at this. I really enjoy his channel too, everybody. Good for you. Here we go. Thank you for popping in once again, Casey. How ridiculous their their enterprise value. Enterprise value, everyone. Why did I do that? Enterprise value, everyone, is the whole shebang. If you wanted to buy the company, you would have to buy their debt as well. So enterprise value is just everything, including debt, market cap plus their debt. So that's enterprise value. And yeah, it's pretty high up there. And I'm not buying Pepsi up here. And this is one reason why I don't like dripping, because I just feel it's way too overvalued right now. But as we saw, hey, maybe some people thought it was overvalued at $82 way back in 2013. You know, that is to be seen and to be determined. Will Pepsi outpace Coke? What's up, Frank? Maybe. It is apples to apples, but it's a little apples to oranges, because PepsiCo has so many snack brands that Coca-Cola just doesn't have. From what I can tell, Coca-Cola is all liquids, all beverages, where PepsiCo is just so much bigger and more diverse. So they have that exposure that Coca-Cola doesn't have. 4 ads during the game. Yeah, and I'm going to have to pick one, aren't I? Because I'm not going to show all 4 ads. I did see one of them, though. Well, it wasn't PepsiCo. It was a Dorito ad. I thought it was, not their best stuff. What's up, clowning? Yeah, live TV. That's me, dude. And that's why I got the phone next to me, and I should check it more. But that was awful. It's been a while since we've done that, right, Coyote? That I'm like, hey, look at how interesting this is, everyone. And the screen's like blank. Yeah, there we go. I got it. Yeah. Jack and Coke got together finally. So what are you guys buying? What, again, share your thoughts on PepsiCo. Feel free. What do you want me to look up? I don't know. Ask me anything. Ask me any question you want. What do you do? Do you know what I heard on the radio for Super Bowl Sunday? There are some people that will do food and drink from the 2 teams. So for Kansas City, it's like, you know, barbecued pulled pork or whatever they do there. And for Philadelphia, they're doing the Philly cheesesteaks. And then for Yingling, right? For the drink, I think Yingling is Pennsylvania. Uh, Rolling Rock is a beer from there. I don't know about wines or anything else. Obviously, uh, Budweiser, right? Budweiser, yeah, Budweiser's from from Missouri. Here in Chicago, there used to be a joke that said, people would relieve themselves in the water and that it would filter its way down to Missouri, and then they would sell it back to us in the form of Budweiser. So let's see. If Pepsi got crazy overvalued, 275. Yeah, that would be tough. I might not, because it'd be a huge that would be a huge tax hit because I hold them in the taxable account. So that would be something to factor in. And but that's one of the great things, right? That's one of the reasons why Warren also doesn't like paying out dividends, because you're forcing people to take a tax hit. And then even if you want to drip, because they usually trade at a premium, you're going to have to buy those shares in at a premium. So I would probably say I wouldn't. It would be tough though, but that's a good thought. And I don't know. I guess that'd be a good problem to have. Tyson Foods. Yeah, what happened with them? They had some negative earnings. We didn't do the news. You guys want to do the news? Let's do news real quick. Let me set this up so I don't bring you there. On Simply Safe, Steve, I think Steve is out skiing, so he usually likes to see the news that happened. Oh, there was a lot of news this week. We'll do it. What is that noise? Let's see. Here we go. What was the 6th? Monday. All right, here we go. There was a lot of news. We'll, if this guy can get here, let's see. I'm going to answer a couple of these first, and then we'll do some news. Dividend increases, ton of dividend increases. Harsha. Hey, what's up, Harsha? Holding Pepsi since his $90 days. Yeah, that's nice. Wouldn't sell, but might stop the drip. Yeah, that's one of the reasons I don't drip. I just at least want to have more control over what I do with those dividends. Shamir is hoping to buy more Tyson Foods. I don't think Tyson's going to go anywhere. They're going to be fine over the long run. I mean, I think people are going to still eating them. Yeah, Kroger. Ryan's all about Kroger as of late, right? Let's see. J&J court verdict. No, I think with J&J and 3M, I'm going to be waiting because I'm waiting for that news to start hitting. For those of you that don't know, what happened was the court blocked Johnson & Johnson's Texas two-step bid, meaning that they try to take all the talc liabilities, put it off in its own separate company, and then that company files for bankruptcy, and they'll tie it to a trust, or they'll fund it, I believe. So say they'll put like $3 billion into it. It means that it caps out at $3 billion. That's all that the litigants, not litigants, that all the, I don't know which, my brain's blanking. That's the most that they can go after them for, but they blocked it. So it's supposed to shield the parent company from almost unlimited going after everything they have. And I think you're going to wait. I'm waiting on J&J and 3M for some of that negative news to hit. And I think they're going to drop. I think some people might panic sell. Hormel Foods. They've got what ad? Oh, I wrote it down. They have an ad today, right? Look at this. Look at this guy. Hormel is Planters. Yeah, they got a Planters ad. Stay tuned for that during the Super Bowl, everybody. Anyway, Hormel, I think they're solid. They own Spam. There's a Spam museum in Minnesota right by one of their main offices, I think. Pepsi's all-time high, I believe, is 186 and change. Joey, what's up, Joe? My fault. If you don't like being called Joey, just reach through the screen. Let me know. 100 shares of ARK. Nice. I'm at 100 shares of ARK. I haven't been adding. All right. Yeah, let me go through the news here. So check out all these dividend increases. There has been just a ton of dividendos, I believe, in Espanol. Ellos dicen. So we'll start with Public Storage. I think this is kind of interesting. Public Storage hasn't raised their dividend since 2016, but the reason that they raised it has to do with them trying to make that bid for Life Storage, which stinks. I was really hoping to work up to 100 shares of Life Storage, but this is going to make it more attractive to the shareholders that they just raised it 50% because they kind of, as I was talking with KC about it, it's a hostile thing. So management may not want to sell, but they're trying to make it, I think it's a little low. I think they're going to want more. They're going to want this pot sweetened, but yeah, Public Storage, by the way, it's almost 0.5 shares per share of Life Storage that we would receive of Public Storage. And I shared a few thoughts that I probably would sell. And well, although that dividend yield now is 4%, so, Extra Space Storage looks interesting as well. Yeah, obviously VF Corp. This didn't look too good on February 6th. They downgraded them to 70 safe. And then the next day they cut. One Main, ticker OMF, raised 5.3%. Look at that, 8.81%. Shout out to them. Does anyone own One Main? DuPont raised their dividend 9.1%. That yield is only 1.9%. So I was like feeling dyslexic there. I was like, did I just say 9.1 or 1.9? It's T Rowe, a little bitty raise from T Rowe, 1.7%, but a 4% yield. Not bad for T Rowe. Obviously, you can go back and pause the video if you want to see any more of these in detail. 3M with that tiny little bump. They've been doing penny raises since 2019, is it? I think 2019. Penny raises, or maybe it's 18. They're trying to maintain, I think, some of that cash flow. They know they're going to have a bunch of payouts coming, but I think it's going to get spread over many years. They're going to be okay in the long run, but I still think they're going to drop below $100 a share, and there it is. And then February 7th, VF Corp reduced the dividend 41%, and Simply Safe said they just got it wrong. Let's see. I guess I'll show you guys. They issued kind of an apology, and they're human, just like this computer's not. Here we go. So there you go. Actually, if you want to read this, here you go. I will slowly scroll my way, making my way down to the bottom, so you people can pause the video. Yeah, you can pause this if you want to read any of this, but they said, we feel terrible about being on the wrong end of this dividend announcement and wish we would have done better for those who relied on our research and ratings to invest in VF Corp. While we understand there's no crystal ball when investing and that we'll never get every call right, this one hurts. We hope you know we take this one to heart. Looking forward, we'll use this unfortunate outcome as a learning opportunity and stepping stone, including becoming less willing to brush off a company's short-term challenges despite a lengthy dividend growth track record. So continuing on with I'm going to go through these a little quicker. Let's see. Prudential raised their dividend 4.2%. I hold Prudential. That was nice. Corning grew their dividend 3.7%. Somebody in the comments recently asked about Corning. Let's see. Crane's upcoming spinoff may keep investors whole. Didn't know about that. Phillips 66, an 8.2% dividend increase. A lot of increases this week, guys. Tons of them. The Avalon Bay, 3.8%. Tractor Supply, I just went there and bought some parts. Ticker TSCO, that's a 12% dividend increase for Tractor Supply. If you don't know, Disney expects to reinstate their dividend by the end of 2023. Let's see. Black Hills tempers growth expectations. They say their dividend's okay. There's our PepsiCo, 10% boost. Reuters, Thomson Reuters increased their dividend 10%. Who knew that? They're a dividend aristocrat. 30th consecutive annual raise, but only a 1.63% yield. I don't know HR, so you can check that out if you want. Annaly, ticker NLY, they're a mortgage REIT, which rising interest rates really hurt those companies. So yeah, that 16.25% yield is not going to be staying. They refresh an outlook on Philip Morris, blah, 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 IFF. International Flavors and Fragrances, that's an interesting one, 3.42%. That's one I want to look into more. And there's another one here. Don't need to get into those. I guess that's it. So those were your news that we sometimes put toward the beginning. Everyone have to let Steve know. Now I got to get caught up on comments. Look at this, guys. I went fuzzy there for a minute. All right, here we go. Coyote, he's been watching MPW. Yeah, how do you guys feel about MPW? I know there's a lot in the community and that aren't fans of it. I'm worried about the Medicare renegotiations, the government. I think people say the camel's nose is under the tent. And I don't know if it's going to lead to single payer, but it's coming. It's coming, guys. Let's see. I talked about, good question, Shamir. Really good. Keeping the Kenvue after the spinoff. I think I'm going to keep the shares of Kenvue. Most times the spinoffs tend to work out. And I think this is strong enough that it's going to work out. Unlike, what was it? Orion Office, ticker ONL, that Realty Income, shout out the office properties. So Realty Income merged with Verit, two similar companies. And then all the office properties, they just discharged. They eliminated those companies out of the new company into its own ticker, ONL, and it's just been doing bad. DGRO, good one. I don't know. Is that, I better look it up before I start saying things. Oh, I don't have it. I've never looked into the iShares dividend growth ETF. Maybe somebody that's watching has. What do you guys think? Let's see. I always heard you can earn weekly dividends by making sure you invest in stock dividends companies that pay dividends the same week. Is that true? I'm not sure what you mean by that. You can space it out. Way back at the beginning of the channel, I did a video on, I think, an aristocrat a week is what I did. But yeah, you can definitely buy companies that will pay you when they pay out, you'll be getting dividends every week. But when you get a nice enough smattering of companies, then you can get dividends every week. Oh, the bubbly. Oh, the bubbly. Let's see. KC says, not holding J&J. There's a reasonable argument to be made that Kenvue is actually more valuable than legacy J&J. That could be interesting because, I think so those of you that don't know, Kenvue, Johnson & Johnson is spinning off the consumer health products like Band-Aids, Listerine, Lysol. I think those all three belong to J&J. And if they don't, it's, those products, the stuff you would find pretty much in the aisles. Well, that might not be a good way to say it, of like Walgreens. But that's going to be one company. And then the other company, I guess, will just remain Johnson & Johnson, is going to be the pharmaceuticals and the medical devices. And that could be a little more volatile, especially the pharmaceuticals. Hey, Eli, yeah, PRI, that's Primerica. Interesting company. Really quickly, we'll show you the Simply Safe and Alpha Spread. Let me just share this entire screen so we don't have any more snafus. All right, we'll go PRI for you right quick. Why is that so far behind? Was I really sharing that the whole time? You got to be kidding me. Was I sharing my screen? Guys, this one's for the record book. I think I was sharing that computer screen the whole time. Fantastic. So Primerica is life, and they don't have a rating on it. Doesn't mean anything. 1.55% yield. They do grow that really quick. Primerica is insurance, term life insurance, investment and savings products, things of that nature. Dude, that dividend, it's almost a dividend fireball. Look at that. 32% 10-year CAGR, 22% 5-year, and they raised that dividend last 17%. Looks like they've been increasing it since 2009, I want to say. And they're going to go ex-dividend in 5 days, paying 65 cents per share. And free cash flow payout ratio, only 11%, really low. I'll just scroll through these slow. So if you want to pause this and see 10 years worth of data, I do like that. Look at that. They're buying back shares. And I like this swoop when you see the shares reducing and the sales continuing to go up. That's very nice. Because remember, when shares get bought back, that artificially inflates earnings per share on its face like that. Most of the time it does. 16% return on invested capital all the way back to 2012. That's interesting. And let's see. Interest coverage ratio, 6.95%. And then let's get you the alpha spread. How about PRI, guy? Let's see if we come up. Nope. Primerica. There we go. Where you live? America. America. All right, what we got? 180.29. So about 8% undervalued on the base case. And worst case for Primerica, they're going to give you, if we come up, there we go, $141.73. Yeah, so this has been a fun one, guys. Let's see, how many Kenvue shares would J&J holders get? I don't think it's been announced yet. I may be mistaken, but I don't think that it has been announced. You must be consumed by the dividend side. Darth, what's up, man? Guy had an interesting night last night, from what I understand. He can tell you about that if he wants. Let's see. Holding Kenvue will depend on the financials, but as of now, yeah, I'm with Kevin. I'm holding both, and that may be an interesting one to get to 100 of if they spin off and a lot of people that don't want it start dumping it and the price drops. That could be an interesting buy. Did they put out the S1 yet, Kevin or Shamir? I don't know if they did. The div raise of should be disqualified dividend king aristocrat. Hey, I can't argue with that. And you make a great case. Like I know Dover, they're right here next couple towns over from me in Downers Grove, their headquarters. But they do microscopic raises, right? Here, let's look. Let's look, everybody. Dover. I know they're a dividend king. And you can do it, guy. What am I doing? I don't know. Here we go. Dover. D-O-V-E-R. Dover, we want to see their, yeah, watch this. This is kind of funny. Div growth. Not a whole lot. 67 years. 1%, their 5-year CAGR 2%, although their 20-year CAGR 7%. Just really small increases. Here we go, 49.5 to 50 to 50.5, 49. So they literally do half a penny a year, does Dover, and their free cash flow payout ratio is 49%. So Dover, they are a dividend king, but little tiny half-cent raises is what they do. Oh, dude, Nick's in the house. What's up, man? Thank you for that shout out on his last video. Awesome. Just sub your channel and good. Yeah, everybody check out Nick's channel. So, kind of little inside baseball here. I was talking with Nick on Twitter, and I told him I commended him on his channel direction because it's just, you know who it's for. It's for dividend growth investing, as the name dividend growth income. It's just no doubt about what it's for. And for those of you that have been with the channel for a long time, this guy has been everywhere. I told Nick, I was like, this is what you need to grow on YouTube. You have to make it crystal clear who your content is for. And I decided to hone it back into just dividend investing. And it took me longer to learn that. And now we're starting to trend in the right direction. But yeah, I did like teen debit cards, crypto staking, penny stocks, options trading, technical analysis, like reading charts. I did, stash, bonds, worthy bonds, acorns. I mean, philosophy stuff, motivation, life advice. I mean, it's no wonder, because when I look back, I'm like, I don't even know what the heck this channel was about. Oh, look at that. Darth owns One Main Financial and Prudential. Cheers to that. I own Pru. It's been a gasser, everybody. Um, Old pipes. Yeah, we're gonna fix this. I'm looking at the screen here, and it just looks awful, awful color balance. Daddy will figure it out. So, anyway, sorry. One Main specializes in loans for people with lower credit scores. Interesting. Yeah, nice raise from them. Not a fan of Disney. I know my dividend talk, guys. Oh, which, by the way, I'm going to try to set something up with Derek, the Irish half of Dividend Talk. I'll be over in Ireland the end of May, first week of June. We're going to just, I think, eight nights, 9 days. We're going to the Irish Isle for, and I'm going to swing by where he lives. I think he's said it. I'm not breaking any news here in Waterford. I think he's open about that. So we're going to try and have a little quick meetup and maybe record something fast. So, yeah, Cincinnati Financial increased 7.5%. I don't know if I read. Yeah, Harsh is going back to no single payer, but will crash healthcare stocks big time. Yeah, and that's always the threat here in the United States, right? Not going to say whether it's right or wrong, but it just is what it is, and it would definitely affect and impact, I think, negatively many of the healthcare stocks. So, do you think Pfizer is at a reasonable price? I do think Pfizer is at a reasonable price, and as Warren Buffett says, I have a short on this. The way he buys pharmaceutical stocks is he doesn't know which drugs in the pipeline are going to be those blockbuster drugs. So the best way to do it, he said, you buy them when they're at a reasonable, fair value or cheaper, and then you just hold them because, again, the J&Js, Pfizer, Sanofi, AbbVie, Merck, those companies are going to do well, but you don't want to buy them when they're overvalued. And I think Pfizer looks like it's at a good good value. Dude, there's so many. Kellogg's, nice one, Shamir. Separating into 3 different companies. You are right. And the plant-based likely to be completed later this year. So I actually sold Kellogg's in the only share. I had them in the Roth. I sold Kellogg's and then I bought more SCHD because they are included in SCHD. So that's one of the reasons I did that, and then to get a little extra cash. I'm dabbling in Casey's franchise group. This will all be in the newsletter, my moves and the prices I bought at. By the way, yeah, sign up for the newsletter below. You can get the free ebook, if you like it. This is the hardcover copy, but sign up. You'll get the free PDF for the ebook and the newsletter. I put it out every week. Quick thought at the beginning, and then everything I've bought, sold, dividends received, and then a quick closing thought. Let's see. What did you say, Guy? What's up, by the way, Guy? Hey, Guy. Let's see. Eli Lilly seems good. Yeah, Eli Lilly. They're out of Indianapolis. They distribute. Oh yeah, you're in the healthcare field. Interesting. I've never really dug into either one of those a lot. And Eli Lilly has a ton of antipsychotics and antidepressants. Okay. Nice. Thank you for sharing that. Kevin says, KenView has a new YouTube channel with only one video. Really? Well, I think it's VUE, right? KenView. Or are you sure you're subscribed to the right channel, Kevin? I just want to make sure. I don't know. KenView is just like some dude in his basement, KenView, yeah. Band-Aid and Tylenol. I think I said a bunch of them. Let's see. Russ, were you surprised that I was? And I don't know if you saw the beginning of the video, Dan, but what I did share was that their payout ratio right now is 111%. And then we actually looked at Coca-Cola. I don't remember the years, guys. It was in the teens. They were at 119, and then I think 109, and then they came down to like 85 or 81. And yeah, that's why I said is just that, man, it's costing PepsiCo right now money to pay that dividend. So that has got to come from somewhere. But they can keep that up for a couple years. But next year, we better see that starting to come down. But we'll see. So I was surprised. Not good. Not good stuff. Hey, Steven, nice to join you, man. Nice for you to join us. We're all joining you on your phone, Steven. It's Super Bowl Sunday. It means Velveeta cheese dip. How about Kraft Heinz? I don't think they've raisin. I don't think they've raised their dividend all that much. I think it's frozen, right? Maybe we'll circle back and look at Kraft Heinz. Let's see. Nominal Dividend King, KHC. Let's look, since you guys are chatting about KHC real quick here. Really quick. We'll look at Kraft Heinz. Kraft Heinz. Chickadee China, the Chinese chicken. Have a drumstick and your brain starts cricking. Cricking. Okay, what are we doing here? Oh, yeah, I'm sharing my screen. People are like, come on, guy. We don't want to see this. You're making my eyes hurt. I have fun talking with you guys. I really do. I look forward to this hour every week because, sometimes we don't share a screen that we're talking about. It happens. I wish there was an alarm bell that could go off. All right, everyone. Kraft Heinz, ticker KFC. KFC. It's not KFC. 4.4% dividend yield. Let's just squim through it quickly. Yeah, they had that dividend elimination and cut. I think that's when they were bought out, right? By 3G and Berkshire teamed up and bought part or most of it, right? With that. Yeah, we've been at 40 cents since March of 2020. And from here, it looks like that dividend has not grown since 2019. It's been frozen at 40 cents. This is not going to load you. Samagam. Free cash flow payout ratio, 55%. Not terrible. So let's see. I'm curious now. I want to see what good old Alpha Spread gives Kraft Heinz. Kraft Heinz. Happy Super Bowl Sunday, everybody that's just tuning in. A lot of the mush mouth. Here we go. So they're giving them an intrinsic valuation of $41 on the base case. On the worst case, you can do it. I'm plugged into the router. $30. So that's some super investors like to wait till below 10% below the worst case on that. I'm going to get caught up to your comments. Okay. S1. I was talking about the Kenview S1. I'm going to have to read that. I am curious now. KC over the risk of it's never a risk of oversimplifying. I know what you mean, but as I go deeper into this journey and sharing, I'm finding that simplifying is better. Lilly put in a record 10-year run. Interesting. That's an interesting thought, Casey. Thank you for sharing. Let's see. Such thing as dividend curse. I've heard the lottery's curse, but what about the lottery's curse? What's the lottery's curse? I need to know. I've heard the lottery described as a tax on hope that people voluntarily pay, but I don't know. Do you mean the lottery curse? Whereas, I know what you mean. When people win the lottery, that they just blow it all because they didn't earn that money. I don't think there's a dividends curse. If you mean from me receiving dividends, I would say no, because I did a lot of working, underspending my income, and investing and building that up. Whereas when people win the lottery, they could have horrible spending habits, and somebody just handed them millions of dollars and said, "Here you go." So it's no wonder they blow it all. I think that's what you mean by that. New management, they're really trying to clean up the balance sheet, pay down debt. I assume that is KHC. I don't remember what you guys were talking about there. Yeah, no risk it, no biscuit with Eli Lilly. That's an interesting thought. That might be a good company to look into. Lilly was around, if it was at 260. I don't know what it's at right now. Let me look. I'm not going to bring you guys, but Eli Lilly is at $345.12. Interesting. And it's funny on that is, again, a lot of beginners think that means it's expensive. But as we talked about last week, if Berkshire was at, what did we say, like $250,000 a share, like Casey said, dude, that would just be stupidly cheap, just dumbfoundingly, if that's a word, cheap. It's a real Mad Hatter's Tea Party here, everybody. Nice. We can wrap up with some Super Bowl talk here. or no, XLEV for a healthcare portion of persons on one pie. That might be good. Dude, look at that time already. The time just flies. I'm gonna get through these comments here. We'll go a few minutes extra here on Super Bowl Sunday. Gilead, yeah, I sold out of Gilead. I don't remember what I went into. I think I don't remember. I'm not gonna say. Look at this. Yeah. Nick was talking about Dover and 3M. Okay. Guy still doing his 100 shares of Visa, 25. Nice, man. 190 actually. Yeah. And obviously, make sure it's a company you want to be stuck with. I was prepared when doing that with PepsiCo. I didn't expect them to just keep running up like they did. And I expected actually to be averaging down for quite some time, but I just was constantly averaging up. It was crazy. Let's see. Still some Eli Lilly talk. I love it. I love you guys talking about it. I love it. Still thinking Eli Lilling's get overpriced. And here, one more. What is my favorite investing podcast? Oh man, OJ. There's a lot. There's a lot that I listen to. I got to give a shout out to my guys at Dividend Talk. I like their podcast. I still like Invest Talk. I don't always agree with Justin and Steve, but I guess I kind of like to hear what people are thinking, what people are looking at, what people have questions on. And it's a quick show. It's, they go over a little bit of news and their opinion and some analysis, really quick analysis. But so that's Invest Talk. And I also like We Study Billionaires. Really enjoy We Study Billionaires. That's on the Investors Podcast Network. I know, just type in We Study Billionaires. Those are probably my big three. Sometimes if I want a little laugh, I don't know if you guys know who Frank Curzio is. I'll listen to Frank Curzio's podcast. And he's really opinionated. We just make up new words like crazy here. And that's probably the main ones I listen to. There's a smattering of some other ones. And Odd Lots. I love Odd Lots. Odd Lots, I think, is a pretty cool podcast. So I listen to, those are some of the main ones I listen to every week. Yeah, so that's that. And then here we go, Andrew. That's what I meant when you answered my question. I wonder, as a person reaches their own financial goals, they get done with it. I don't think dividend investors get done with it because we've spent so long building this. And man, just to, what did they say? I guess I could say piss it all away. Just to do that, we don't do it. If anything, we probably don't want to spend it because we feel like we've been building that up for so long. So I think it's completely the exact opposite with dividend investors who've spent the better part of probably a couple decades building their positions. But hey, stranger things have happened. Anything could happen. And by the way, thanks for all your questions, Andrew. I really do appreciate it. I really do like it. And I'll take one more. Ask me one more question on anything. Doesn't even have to be investing related. I don't even care. Let's see. The safest retirement is bake in the growth of the nest egg. Yeah. And most times people, because we're so used to saving that it just grows faster than we can spend it, is what happens to a lot of people that I've read and studied and seen. And Super Bowl's today. Here we go. All right, good. Do you have any money on the game today? No, I almost did though. I almost did a $20 prop bet. And for those of you that don't know, prop bets are, will Patrick Mahomes, they'll say 2.5 touchdown passes, or Travis Kelce, I think 77.5 receiving yards, and you have to go over or under, and there's a spread on it. But I almost did a couple of those, and I thought, if I don't want to do it, I didn't do it. So for my pick and who I'm supporting, well, I'd like to see the Eagles win it, but Patrick Mahomes is, dude, if you guys remember, not to get too in depth, but the Chicago Bears could have drafted Patrick Mahomes They traded up to draft Mitch Trubisky at the number 2 pick. And then Patrick Mahomes went, I think, behind Deshaun Watson, maybe. But either way, Mahomes is just a Hall of Famer. And I think it would be cool, though, to see the Eagles win it. I don't know. It's been a minute since they've won it. And Mahomes, he's been there. What would that be? Their second win in 5 years or something. So I like to see the team that hasn't won it in the longer time frame win it. But I think it's going to be close. I think we're all expecting a close game. And again, for those of you that just tuned in, for the second year now, I'm going to do my top 10, although last year was 7, but this year I'm going to do 10 because I know I'm going to have 10. I'm going to do my top 10 dividend paying dividend company Super Bowl commercials. And that should be fun. I'll do a countdown from number 10. And I've already got some picked out there, but yeah, that's going to be fun. Here we go. All right, last question from Dan. I'll take it, Dan. Are you bullish on Lockheed Martin for opening a new air-to-balloon military sector? Oh, God. I don't know, man. I get the joke, but isn't there I was scrolling through news headlines this morning, and I saw something about it's entering Canadian airspace. There's another balloon. I don't know what's going on with it. It's kind of comical. I don't feel threatened. And I do know some of my fellow people around here are worried and like we got to attack China. But I don't know, man. That'd be good for them. They shouldn't be too hard to shoot down. I mean, maybe lasers, right? Just use some lasers. So it's a weird time, dude. I don't know what's going on with these air balloons. Maybe they're giving people hot air balloons. That's how they're going to sneak in or something, I don't know. But hey, have fun today. It's supposed to be a day to eat some unhealthy food and just be a bit of a glutton. And I'll leave you guys with this. As Charlie Munger is fond of saying, that envy is the only sin that leaves the sinner feeling worse than they did before the sin. And then they always make the joke that gluttony, they all have their upside, especially gluttony. Because when you're eating, it's going to affect you down the line. But at the time that you're being a glutton, it's pretty cool. It feels pretty good. And I can't say how you'll feel later, but that's my thought. Don't try to be envious. Always compare yourself to yourself and try to be better than you were yesterday and try to be smarter when you go to bed than when you woke up. So, guys, that was too soon. I didn't mean to play it that quick. Yes, it's just fitting that this is how the show ends, right? So, I'll be back next week, I think is what I was going to say. I don't know. I'm going to go eat. I'm hungry. My brain needs fuel. We're running low. So, thanks for tuning in, everybody. And I will see you again next week. So long, everybody. Now go, Pee-wee.